Hello, this is Brandon Rusbus, your mortgage guy. Hopefully here to dispel some myths I've heard people talking about. Okay. So Navy Federal Credit Union is in the news today or this week, right? CNN covered a statistical truth. I don't know. I'm not going to comment on why the statistical reality exists. Not going to comment on it. It's not my place to comment on it, right? Somebody smarter than me who's going to deep dive into the data is going to figure that out, okay? I'm just the mortgage guy. And so you listen to the commentary on the internet and these personalities will say things like maybe blah, 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 because you need 20% down to get a conventional loan. That's not true. Okay. If it's a primary residence, you don't need 20% down. The things that matter in terms of determining your down payment are your credit scores. Do you have the qualifying credit score for the loan product? And your occupancy type. Okay. So if you're a primary resident and you have the qualifying credit scores, the bank's going to treat you nicer than they're going to treat somebody who's getting a secondary property or an investment property. A secondary property means you're not renting the property out. You're going to live in that property during certain parts of the year, right? So if you like going skiing, Colorado is your destination. Maybe you want to get a house in Colorado, right? If you like going to the beach, maybe you want to get that second home in Florida for when it's cold where you live, right? Or maybe you want to visit Tybee Island in Georgia when it's cold where you live, right? That way you get away during those months. Or maybe you want to spend the summer months at the beach. It's your business, right? But you have enough money to buy a secondary home and afford your primary residence, right? So, but they're not going to treat the person looking for a secondary home as nicely as they're going to treat the person who's looking for the primary residence, because if someone's going to foreclose on a property, more than likely they're not going to foreclose on the house that's their home, right? Their primary residence. If someone's going to do a short sale on a property because they can no longer afford it, or they just don't feel like it, you're more than likely not going to feel like it with a secondary home anymore. With secondary homes, you have a bigger down payment than primary, but it's still not 20%. Still not, right? And then you have to think about mileage requirements, and you have to think about all these other things. But for secondary homes, you still don't need 20% down, right? So you can buy your first home and your secondary home, and you can have a certain number of secondary homes, right? It doesn't just have to be your second home, right? And we can talk about how many secondary homes you can have in another video. Investment properties are typically where you see the down payment requirements get larger. Investment properties, you'll see things where it's like, hey, you need 15% down, 20% down, 25% down, depending on the loan type you're using to get that investment property, right? And so most people in the US, in terms of individuals, are not buying investment properties. So most people who are looking to buy the home their family's going to live in, 3%, 3.5% down, 0% down, 0% down. And then certain lenders have down payment assistance programs that will get you into the home by financing the down payment, right? And you might have to pay it back over 10 years. Or as your home gains equity, you can refinance both mortgages into one mortgage as long as your DTI is safe and as long as your credit scores are safe and all those other qualifying things that underwriting systems look at are safe, right? So again, just here to dispel the myth. Do you necessarily need 20% down? Not if you're buying a primary residence. Not if you're buying a secondary home. If you want that beachfront or that mountain view, you don't need 20% down. So just here to dispel the fear, right? The thought that you need 20% down is kind of a 1930s, 1940s reality. Our government has been helping Americans buy homes for a long time now. Occupancy matters. The kind of occupant you are, whether it'll be primary, secondary, or investment, matters. And it affects the credit score you need. It affects the down payment requirements. But I'd say the easiest requirements are placed on people who want a primary residence, who are going to live in the house they're buying full time, or a lot of the time. It's going to be the place you live in most of the time. Hey, this is Brandon Respers, your mortgage guy. Thank you for watching the video. If you found it useful, hit that subscribe button and make 2 other promises today. If you have any questions, feel free to leave them in the comment section. I'll make another video to answer your questions. And then the 3rd promise is to believe in your path to yes. Every person on this planet has a path to yes. You just got to believe in it. You got to pursue it. So have a great day. Take care.